When a person with money meets a person with experience, the one with experience ends up with the money, and the one with the money leaves with experience. This was Warren Buffett's reply when he was asked about his best investment advice on his 87th birthday. He believes that experience is the most important factor in becoming a great investor. But what about people who are brand new to investing? What if you have no prior experience? What if you have very little money to invest? Fortunately, you can still learn from experienced investors such as Warren Buffett. Usually, any account or asset valued at less than $1 billion is seen as insignificant in the vast ocean of the financial world. As a result, everyone who invests on their own is a small investor, from rookies with a few dollars to those with many millions. The good news is that there are countless options for newbies and small investors alike in the investment scene. The excellent news is that these small investors have some advantages and changes that even firms with billions of dollars in assets do not have. In fact, small investors who learn to leverage their advantages can frequently outperform markets and large funds. So why must you start investing? Keeping cash in a savings account alone won't make you richer, especially because inflation frequently exceeds whatever interest you may have earned. This is why you need to make sure your money is making more money for you while you're busy with life. Yes, at first glance, investing can appear stressful, which is why the majority of individuals are reluctant to gamble with their hard-earned money. But with some research and careful planning, you can create a diversified investment portfolio. If you want to learn how to invest money, no matter how little, here are some rules from famed investor Warren Buffett to help you develop an investment strategy. Number 1. Make investments that you understand. Warren Buffett, the famed 92-year-old businessman and Berkshire Hathaway CEO, continues to live by the investment advice he has preached for decades. Buy stocks in companies you understand and believe have long-term worth. Buffett claims that before investing in a business's shares, he must first understand how the company produces money and the major forces that affect its industry in less than 10 minutes. If he can't understand it in 10 minutes, he moves on to another company to analyze. Buffett also cautions against investing in circumstances where the outcome depends on the precise future estimate. If it is too complicated for you, simply look for other firms to invest in. Number 2. Trust a low-cost index fund for your portfolio. While much of Buffett's wisdom and advice borders on the philosophical, he has also provided some actionable tips that nearly anyone can apply. For instance, Buffett urges the average investor to purchase index funds. Put 10% of the cash in short-term government bonds and 90% in very low-cost S&P 500 index fund, he advised Berkshire Hathaway shareholders in a 2013 letter. Buffett also said during a 2004 Berkshire Hathaway annual meeting that if you invest in a very low-cost index fund where you don't put the money in all at once but average it over 10 years, you'll do better than 90% of people who start investing all at once. Number 3. Diversification isn't always a good idea. Diversification, according to many skilled investors, is a fantastic strategy for stock market investment. However, Warren Buffett is not a fan of the concept. According to him, diversification is something investors with limited experience should avoid doing. A seasoned investor ought to choose long-term stocks and have faith in their investments. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Warren Buffett. Number 4. Prefer quality stocks than cheap stocks. Many people buy stocks based on only their low prices, without realizing that the low cost is not necessarily better. Buying a great company at a fair price is far better than buying a fair company at a great cost, according to Warren Buffett. Compared to investing in a stock that is appropriately valued, the likelihood of losing money when buying cheap stocks is relatively significant. The best investment, I think, is a good business, he once said when asked about investing to combat inflation. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. Buffett once stated that out of the approximately 10,000 publicly traded companies, he would prefer to invest in only a few hundred before even considering valuation. Number 5. When you buy a stock, plan to hold it forever. If you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes, Warren Buffett. Warren Buffett firmly believes in the buy and hold philosophy. Why? For starters, it can be challenging to identify exceptional companies in a short span. Quality companies usually generate strong returns and see their worth rise over time. Time is a wonderful business's friend, as Warren Buffett once said. Only patient investors benefit from fundamental changes in a stock's price, which can take years. Investing is commonly perceived as being more difficult than it actually is, but by adopting Warren Buffett's straightforward strategy based on common sense, You may improve the way your portfolio is managed, lower the likelihood of expensive mistakes, and increase your return on that small investment. If you want to watch more amazing videos about investing tips from finance gurus, we suggest you subscribe to our channel and check out our videos. Thanks, and I'll see you in the next one.